Alright, let's dive into something that's been bubbling up in the currency markets lately, the US dollar to Japanese yen pair. Now, if you've been keeping an eye on Forex, you've probably noticed some interesting movements here. But what's really going on? And more importantly, what does it mean for traders and the broader economy? Let's break it down. First off, the US dollar to Japanese yen pair has been on a bit of a rollercoaster this week. After a solid recovery from the 155.25 to 155.20 region, its lowest point since May, it's now drifting lower during the Asian session. But here's the kicker, it's not crashing. Instead, it's trading just above the mid-157.00s, down less than 0.1% for the day. Personally, I think this resilience is fascinating. It's like the market is taking a breather, but there's still a lot of tension beneath the surface. Now, what's driving this? Well, on one hand, Japan's real wages grew for the sixth straight month in June. That's a big deal because it gives the Japanese yen, JPY, a bit of a boost. Plus, the Bank of Japan's, BOJ, hawkish minutes are adding to that upward pressure. But here's where it gets interesting. Oil prices are languishing near multi-week lows due to hopes of a US-Iran peace deal. That's easing inflation fears and, in turn, tempering expectations for a Fed rate hike. So, while the JPY is getting a lift, the USD is feeling a bit of a pinch. What makes this really interesting is how these opposing forces are balancing each other out, for now. But let's take a step back and think about it. Japan's fiscal condition isn't exactly rosy, and the wide US-Japan rate differential is keeping JPY bulls in check. In my opinion, this is a classic case of macroeconomic tug-of-war. On one side, you've got Japan's domestic strength, on the other, you've got global factors like oil prices and Fed policy. What this really suggests is that the US dollar to Japanese yen pair is stuck in a kind of limbo, not quite bullish, not quite bearish. From a technical perspective, the charts are telling a similar story. The pair is trading below the 50-hour exponential moving average, EMA, which is a bearish sign. But the RSI is neutral, and the MACD is flatlining. To me, this feels like the market is waiting for a catalyst. And that catalyst could very well be Friday's US non-farm payrolls, NFP, report. If you take a step back and think about it, this is a perfect example of how macro events can dominate technical indicators. Now, let's talk about the bigger picture. What many people don't realize is that the US dollar to Japanese yen pair is often seen as a barometer for risk sentiment. When it's rising, it usually means investors are feeling confident. When it's falling, they're getting cautious. Right now, it's stuck in the middle, which tells me the market is uncertain. Personally, I think this uncertainty is tied to broader trends, like the Fed's rate hike trajectory and Japan's economic challenges. One thing that immediately stands out is the JPY's performance against other currencies over the past week. It's been the strongest against the Canadian dollar, which is intriguing. If you look at the heat map, you'll see that the JPY has gained against almost every major currency. This raises a deeper question. Is the JPY becoming a safe haven asset again? Or is this just a temporary blip? In my opinion, the JPY's strength is more about the USD's weakness than anything else. With oil prices down and rate hike bets cooling, the USD is losing some of its luster. But here's the thing, the JPY isn't exactly a powerhouse either. Japan's fiscal issues and low interest rates are still major headwinds. So, while the JPY might look strong now, I'm not convinced it's a long-term trend. As we wrap up, I want to leave you with this thought. The US dollar to Japanese yen pair is at a crossroads. It's caught between Japan's domestic strength and global economic uncertainties. Personally, I think the next big move will depend on how those factors play out. Will the Fed surprise us with a rate hike? Will Japan's fiscal situation worsen? These are the questions traders should be asking. So, what do you think? Is the US dollar to Japanese yen pair headed for a breakout? Or is it stuck in this range for the foreseeable future? Let me know in the comments below. And if you found this analysis helpful, don't forget to like, share, and subscribe for more insights into the fascinating world of Forex. Thanks for watching.